Now we're going to explain the part 2 of chapter 2, which is regarding the valuing of accounts receivable. The explanation of the valuing of accounts receivable can be found on page 66. So sometimes companies cannot collect all of their accounts receivable because some customers may not be able to pay the amount. In this case, the accounts receivable will be called as uncollectible. There are two methods for accounting the uncollectible accounts receivable. The first method is called the direct write-off method, and we only have one entry. It's very simple to calculate it. The second method is the allowance method, where two steps are included. First, we need to estimate the accounts receivable that will be uncollectible. After that, we write off. In order for us to estimate the uncollectible accounts receivable, we need to apply one of these methods, or we use the percentage of sales method, or we use the percentage of receivables. Let's start with the write-off entry. So there's an example on page 66 regarding the direct write-off method. So assume that on February 1, Fix Up sells goods for $30,000 to Ronald Company on account terms 210 and 25. On February 26, Fix Up receives official notice from Ronald that the company is unable to pay the amount and will not pay it in the future. That's why the company needs to write off the accounts receivable that will not be collected. Here, Fix Up uses the direct write-off method to record the write-off of Ronald's accounts receivable because Ronald will not be able to pay the accounts receivable. That's why we need to write off his account. So the amount of the accounts receivable is $30,000. We put it in the credit. And the uncollectible accounts receivable is called a bad debt expense. Since it is an expense, we record it in the debit side. Here we have the solution for the exercise, also found on page 66. Now regarding the allowance for doubtful accounts method. Like I previously explained, there is two steps in this method. First, we need to estimate the accounts receivable that will be uncollectible, and then we write off the account. When we estimate, the recording will be bad debt expense in the debit, but instead of writing off the account and putting the AR, which is the accounts receivable, as in the direct write-off method, we need to put the AFDA, which is the allowance for doubtful accounts, in the credit. When we write off, the AFDA, which is the estimated account, will be debited and the accounts receivable will be credited. So this is done when we write off the account. So in order for us to calculate the estimated accounts receivable, there is two methods: the percentage of sales, which mainly relies on the bad debt expense in order for us to calculate it, and we have the percentage of receivables, which will rely on the AFDA in order for us to get the estimated accounts receivable. So assume that Fix Up has credit sales amounting $500,000 during 2017. At the end of the company's accounting period, Fix Up credit manager estimates. So since we have estimation, then we are using the AFDA method, that $10,000 of this sales will be uncollectible. So 10,000 of the 500,000 will be uncollectible. Fix Up records the following adjusting entry to acknowledge this estimation. So like I told you, when we need to record the estimation, the entry will always be bad debt expense in the debit and allowance for doubtful account in the credit. Here the estimated amount is given, so it's $10,000. Assume that on January 31, 2018, Fix Up writes off 1,500 owed to company by Sherman. So we wrote off an account for $1,500. So when we write off using the AFDA method, we will have AFDA in the debit and the accounts receivable in the credit by the amount given to us. So what if the account that was previously written off now is being paid? What should be done? If this happens, the company needs to recover the accounts receivable, which means that we need to recover the accounts receivable that was written off. So here's an example which is found on page 68. Assume that on March 15, 2018, Sherman pays the $1,500 he owes to Fix Up. The records of the collection of cash, which is the recovery of accounts receivable, is as follows. We need to reverse the process of writing off. So in March 15, 2018, we need to put the accounts receivable in the debit and the AFDA in the credit. We're doing a recovery of accounts receivable. And after that, we put the amount that was paid. So here Sherman paid $1,500, so cash is increased in the company and the accounts receivable of Sherman is decreased. And this is the given of the exercise found on page 68 and the solution for the exercise. Now, how can we estimate the allowance for a doubtful account? The explanation is found on page 69. So how to estimate the amount of accounts receivable that will be uncollectible? The estimated uncollectible accounts receivable can be computed based on the percentage of sales or the percentage of receivables, or what we can call it as an aging schedule. Let's start with the percentage of sales basis. It's found on page 69. Here we have an example. Assume that Fix Up has total sales of $2 million, out of which 25% are credit sales. So 25% of the $2 million sales were sold on account. So they are accounts receivable for the company. Fix Up uses the percentage of sale basis in estimating uncollectible. So in order for us to estimate the amount of accounts receivable that will be uncollectible, the company is using the percentage of sales. On December 31, 2017, the company assumes that 2% of its credit sales will be uncollectible. So here we need to record the uncollectible accounts receivable using the AFDA method. Since using the AFDA method, the entry will be bad debt expense in the debit and AFDA in the credit. How can we get the amount that will be debited and the amount that will be credited? So the first step, we need to get the credit sales. The credit sales is the total sales times the percentage that was sold on credit. So we have 2 million times 0.25, so $500,000 are the account receivable of the company. The company decided that 2% of the credit sales will be uncollectible. So we have the credit sales 500,000 times the uncollectible, it's 2%, so 0.02, so we have the $10,000 is estimated to be uncollectible using the percentage of sales. Here we have an example on page 69, and this is the solution for the exercise.